Hi everyone, this is Jordan at Pure Elliott Wave, and I am here today with an analysis of the US dollar index. And this is very important for me, particularly because there is a strong negative correlation with the euro and the US dollar index, which we can show you a little bit later. Both of them are at a pivotal moment right now, and we've been expecting this on my euro analysis for a while now, and there could be a potential spike in either direction depending on how price acts. So if you think my analysis provides some clarity for you today, consider checking me out at Pure Elliott Wave, where you can subscribe to my euro analysis 5 times a week and a video every Friday. So let's jump into the charts. So I'll be presenting you an alternate and a main count, but those are at the weekly level. The alternate will be showing upward movement, moving up here in this direction with intermediate 2 not yet complete as an A, B, C expanded flat. And the main count remains the same as last time, where we're expecting downward overall movement for a zigzag, and that zigzag will be the third wave in this giant triangle, which shows the triangle channels here, and overall it's expecting downward movement, which oscillates around this 100 area, which has been very important in the past. It's important to note that last month we did break the 100 area, but we had this long lower wick, which shows some bullish strength, causes some concerns because we are headed into a third wave. This wave count expects the sharpest movement of that to be underway shortly, so if we don't move downwards soon, then we would shift to the bullish short-term count. Right now we have a target for intermediate 3 within primary A of this zigzag to reach the 1.618 extension of intermediate 1, and we're assuming this is a zigzag moving downward because every wave in a triangle must be a zigzag or a zigzag combination. There can only be one zigzag combination in a triangle, and that's what we have cycle wave B labeled as a WXY double zigzag moving upward. There's a lot of technical significance here for a top in September 2022, just like there is a lot of significance and signs that there was a bottom in the euro in September 2022. On the weekly chart, we'll take off from the top here of cycle B and look at this price action in a little bit more detail. Weekly chart, we can see a little bit more detail for intermediate 1 and intermediate 2, and then the third wave moving down here. We had initially expected A, B, C, and then that was invalidated when price moved sharply lower here and here for the impulse moving upwards. So the alternate, however, is expecting sharp movement upwards and a very, very long second wave here. So this was a very short second wave, which almost doesn't have a right look to it because of this C wave being so short. So it's important to factor in our alternate and this wave count equally, and keep an eye on this best fit channel, which is very important. It has 1, 2, 3, 4, 5 different tests along it. So if price did move higher, we'd lose some confidence in this count. And then if the invalidation was struck above 104.70, that is where minor wave 3 moves beyond the start of minor wave 2. And it also factors in a diagonal for this wave moving downwards. So that's why we have that number here, because it could be a 1, 2, 3, 4, 5 expanded diagonal, which you'll see on the alternate, and then a second wave upwards here. So it'd be 1 diagonal, 2 up, and then 3 down. So this invalidation incorporates that option as well. So far we have intermediate 1, 2, minor 1, 2, minute 1, 2, and then we also have potential another 1, 2 here that you'll see on the daily chart. Targets for all 3 of those third waves are calculated below using the 1.618 extension for intermediate, minor, and minute degree. On the daily chart, we'll take off from the bottom of intermediate 1 and look at this price structure in a little bit more detail. The daily chart showing intermediate 1 intermediate 2, and then minor 1, minor 2, minute 1, 2, and then from there we also have minuet 1 and 2. Best fit channel is copied over from the weekly chart. You can see that invalidation above. Targets remain the same on this chart. You can see price moving up swiftly as a sharp movement, and that could be a sharp wave too. You can see just how close the best fit channel is on this chart, so keep an eye out in the next few days if this is broken. We define the channel breach as a candle above and not touching this channel. We are expecting downward movement though, as long as that channel remains intact and not broken. Here's the alternate count, showing long-term downward movement. However, medium-term upward movement for minor C. You can see intermediate 1 to the downside, and then an expanded flat A, B, C at minor degree, with A and B complete, and then C must subdivide as a motive structure, either a diagonal or an impulse. We have targets calculated for C to reach the 1.618 extension of minor A, or to reach the 618 retracement of intermediate 1. That gives us a target range of 107.77 to 109.45. The invalidation below is where a second wave in the C wave up moves beyond the start of 1. That would be at 99.58. On the daily chart, we'll take off from the bottom of intermediate 1 and look at this in a little bit more detail. Intermediate 1 complete, A, B, C for B, and a motive structure for C here. Volatility could increase if the Elliott channel was broken upwards, or the support / invalidation down here was broken downwards around 100. For the expanded flat, A must subdivide as a 3-wave structure. We have an A, B, C zigzag for A. B can subdivide as any corrective structure, subdividing best here as an A, B, C zigzag, which is the most common for B waves. And then C is expected to move sharply upwards to our target zone. Within minor C, could have a potential first and second wave up complete right now. This degree of labeling sometimes changes because there are many ways to count an impulse upwards. Since we are complete potentially with the first and second wave up, we'd expect volatility to increase for a third wave, as third waves are often the sharpest point in an impulse. That would correlate well with that best fit channel and the Elliott channel. Elliott channel here is a reliable indicator within a zigzag to predict the end of a C wave. And you can see we drew the first line from the start of A to the end of B, and we placed a parallel copy on the end of A. And then C often finds support along the end of this channel, and that's exactly what happened here. So that's reassuring to see and adds some strength to the bullish wave count. We'd have a few confidence points here. The first would be at 104.70. That's where the bearish wave count is invalidated. We had the best fit channel that could be seen on the weekly chart, and that'd be broken very soon if price moves upwards. Then we have this Elliott wave channel. Based on those, you have a plethora of different levels at which you could base your decisions depending on your risk tolerance. Now let's move on to the technical indicators. It's a new month, so we'll look at the monthly chart with July's candle complete here, and you can see today's data is not showing up with it, which is the 1st of August. However, last month we had a break of support, but then price swiftly moved back up. So these wicks in general for the bottom here, all taken as a whole, are bullish and support the bullish wave count. Moving averages are bullish as well, with the 2-year sloping up, the 1-year just now sloping down. Price currently trading above the 2-year moving average. There's no recent candlestick patterns here. The top wick here is too long to be a hammer. Next major resistance above sits at 112.2. ADX is showing that there is no clear trend right now. With ADX showing no clear trend, we'd expect for prices to overall decrease until support is reached, which support was reached, and stochastics reach overbought, and stochastics reach oversold. So stochastics are still neutral, however, they are close to oversold right now. So there could be a little bit more downward movement according to this consolidation ADX and stochastics model. ATR overall is increasing with bearish movement, and we saw that last month with a large move to the downside. There's no long-term reliable correlation with gold and the US dollar index. You can see it whipsawing from a negative to a positive correlation back and forth. There's no long-term correlation between the US dollar index and the S&P 500. Seems to be even worse than gold here. On the weekly chart, you can see the trend line with 5 tests to it and price just below that. Really no recent candlestick patterns to speak of here. And we're currently trading below a downward sloping 200-day moving average around resistance at 100. ADX is showing the early stages of a bear trend. However, this could easily be flat to downward sloping with just a little bit of price movement. Stochastics are showing some bullish divergence when price made a lower low. Stochastics actually made a higher low, so that is bullish. However, not as bullish as divergence with RSI. RSI is neutral. ATR is overall declining as price moves lower. You can see here, we've correlated the US dollar and the euro dollar and showing a consistent 90% negative correlation. So this is what you'd want to see versus the other S&P 500 or gold chart that I showed you before. The daily chart, you can see an evening star just a few days ago in this upward trend, which had a small decrease there. Recently, no candlestick patterns. We did have a indecision candle here with long upper and lower wicks when price did attempt to break through that best fit channel upwards. There's some short-term resistance around that area too at 101.85. You can see price struggling around this area. So it's a little bit weaker resistance, but relevant to price right now. The moving averages overall are bearish. Price is trading above the 13, which is sloping up, but below the middle 50-day and the long 200-day moving average, which are both sloping down. ADX is showing no clear trend, and stochastics are entering overbought and reaching resistance overhead, which indicates price could move up just a bit further until stochastics are overbought and resistance is reached. RSI is neutral, and ATR overall with the sharp move down and up has been flat. On the daily level, you can see a negative 75% or more correlation with the euro dollar here. Based on the daily chart showing a pivot on ADX potentially coming soon with no clear trend, stochastics headed up into overbought and price moving up, that is showing short-term bearishness. There's also the bullish candlestick on the monthly, which contradicts that. And then the weekly chart shows bullish stochastics divergence, and it's in the early stages of a bear trend. There's also that trend line overhead, which may act as resistance. So for the meantime, I'll remain bearish on the US dollar index until that trend line that comes down like this is broken upwards, and that would be also when this resistance is broken overhead. So if we saw that resistance overhead get broken and that trend line that is on the weekly chart get broken confidently as well with the candlestick above and not touching that line, then I'll be bullish for the short term. That is all from me here, Jordan at Pure Elliott Wave. Hope everyone has a great week, and I hope I provided some clarity in this crazy market.